handout for Fast and Fun Footwear. There's also some other stuff in there. And then we're going to do the multiple choice questions for 12 and 13 and the chapter 13 exam. Be emailed after class. One thing I want to start off with though tonight is this goes back to chapter 12, and you can just take a screenshot of this if you want, or if you want to write it out, you can too. I put this in because I realized that while it's in the handout, I don't think I talked about it like I should have. All right. Anyway, coming down here. So add these, you can add these two on the bottom of it, or just take a screenshot of this. And this is about inventory. And not all the inventory of a business is on hand. So they don't all, it doesn't have to be in their warehouse or their store or whatever for them to own it. It's possible they have inventory that's out on consignment. So they have some of their inventory on someone else's showroom or whatever it is. And it could also be inventory that is in transit. Purchases that are shipped FOB shipping point, that means that whenever they were shipped, we own it. Sales that were made FOB, I think FOB I think stands for free on board or freight on board. I've seen it both ways. But anyway, free on board destination means that we own it until it gets to the destination. So it could be something we shipped at the end of the year, but if it's FOB destination, that means we still own it until it reaches the destination. So not all the inventory that they own will necessarily be on hand. And it goes the other way too. Not all inventory on hand is owned by the business. There might be inventory in there that was on consignment from some other place. Let's say that is on consignment. So consigned inventory, so inventory that is on consignment. That's inventory that they have on hand that is not actually owned by the business. I actually had an audit, we ran into that. I was on an audit that they had these big conveyor belts. It was for US Steel. And they had these big conveyor belts, and they had these huge rolls of. I couldn't find it in the inventory, and finally no one knew about them. So finally, I got a hold of one of the maintenance people, and they said, "Yeah, the people who own those, they just drop off these big rolls, and then someone comes in and counts them and sees what we used, and then they bill us for whatever is used. We have the space; they don't want to, keep it in their warehouse and pay for that, so they just drop the belts off, and whenever we use them, then they charge us for it." So it was we didn't have any inventory, even though we had a bunch of this, miles of this conveyor belt stuff. Okay, so not all inventory for business is on hand, and not all inventory on hand is necessarily owned by the business. Okay. Okay. Now let's go to CPA exam stuff. The first one here, this is kind of like the handout page that we give to people thinking about going into accounting, thinking about taking the CPA exam. The base salary for the CPA exam is fairly, for a CPA, I should say, is fairly high. It ranges from around 74,000 up to 486. I imagine these are partners in CPA firms. Now, the CPA exam is a license. Unlike most of your other designations, it's a license. It is not simply a certificate that a professional group gave out. And it's just like a driver's license. Your driver's license, you pass the written exam, and then they take you on a road test. And if both of those are okay, they give you a driver's license. It's the same thing for a CPA license. You pass the exam. Your road test is kind of like getting 1 year of experience. And once you do that, they give you the license. Nowadays, just so you know, and this is It's been probably 10 years since this has changed, or maybe a little less than that. But the CPA license can be easily transferred between states. So if you're gonna, once you graduate, if you're gonna work here and then you plan on going out to Washington or something like that. Basically all you do is go to Washington, you have your stuff sent to Washington, they will give you a license, and you can forfeit your license in Illinois if you got the license in Illinois. You can also keep it. Theoretically, you could be licensed in all 50 states. Now, you don't want to do that because you got to pay the fees in all 50 states. And Illinois is $300. So, yeah, you're going to run into be really expensive. But you can always transfer it, and if you decide to come back to Illinois, you go back to Illinois, you send all the stuff, you get your license reinstated in Illinois. They'll probably give you a new one actually, but you get your license in Illinois, you forfeit the one in Washington, and that's it. It's a pretty, I would think, and it's a lot easier. It used to be kind of a nightmare. Okay. I think we talked about this. The CPA exam used in every state is the same. It's made by the AICPA. So the AICPA is a club. You pass the CPA exam, they'll say, do you want to join our club? And you can say yes or no. But anyway, they make the CPA exam. And every state uses the AICPAs. They don't have to, but every state does. They can make their own up. To sit for the CPA exam, you need a bachelor's or master's degree in accounting. To pass CPA exam, you'll need to take a CPA review course. And part of the CPA review course is getting used to the format of it. All the CPA review courses now are online because that's the way the test is given. And they're very accurate as far as showing what you're going to be running up against. So, it's a very good idea. I say you virtually have to use some kind of software to get used to the format of it. The CPA exam consists of 4 parts to be completed within an 18-month period. And the 18-month period begins at the passing of your first section. So when your first section passes, you pass your first section, then the clock starts ticking, goes 18 months. Now, if you go past 18 months, it's not the end of the world. You just have to retake anything that's more than 18 months old. It's not something you want to do, but okay. I don't know if you guys talked about this in your other classes, maybe you already did, but the CPA exam 2024, it's changing. There are 3, it's always been 4 parts, and it's still going to be 4 parts, but there's 3 core parts. And so these 3 everybody takes. And then coming down here, you're going to pick one of these 3. So you can pick something that you're either more interested in or have more experience in. So for instance, if you do a lot of taxes, you may want to take the tax and compliance. And by the way, these are kind of, they go along with the 3 ways that CPA firms make money. How do they make money? They do business analysis, which is kind of like consulting. They do auditing, or they do taxes. Those are probably the 3 biggest ways that they make money, so you can specialize in those. Now, the license is exactly the same, though. The CPA license is just a CPA license. It doesn't show which one of these you passed, and it doesn't make you an expert in that field. So if you take the tax one, it doesn't make you an expert in taxes. Although I would think you could still put it on your resume, especially if you're going for a tax job. You may want to tell them, look, when I passed the CPA exam, I took the tax concentration. So there wouldn't be a problem with that at all. But anyway, it kind of goes in a little bit more discussion here of what those options are. Everything else is pretty much the same on it. It's still gonna be, each exam is about 4 hours. And you have to pass 4 of them. You got 18 months to pass 4 of them once you pass the first part. So the difference is we have these 3 kind of different tracks that you can go to, either what you feel more comfortable in or what you plan on going into. Either one of them. And by the way, when I used to take it, it was yeah.
Yeah, so Professor, I have a question here. So for those who's get their eyes on the CB exam and they are looking to take the CB exam and in the process of evaluate their like transcripts, all that stuff, do you think it's better like to wait till 2024 and get those changes kicks in and then go for the CB exam, or it's not going to be like a big change?
Well, yeah, you'd have to get it in this year if you're gonna, if you want to sit for it this year. And I think, I'm not positive on this, but I think that the deadline, the 18-month rolling period, I think that they're going to continue that for the next 3 years.
Mm-hmm.
And then it's going to be phased out. So, it would be possible that you take it, if you pass a part of it, that they'll continue with the other one, I believe, for 3 years. And this is what I'm not sure if that was actually part of what was passed. That was part of what was proposed. But yeah, so I would probably say wait till 2024. That would be my thing, because then you would have, it's going to be what all the CPA firms are basically gearing their CPA review for. What would be bad is to go into following years where they really haven't, maybe they don't have the materials for all of the previous exams. They're probably concentrating on the new one, the 2024 one. But it is an option if you take it this year. Yeah, it now after yeah, so after this, coming down here, I believe this is pretty much the same. Actually, this is maybe a couple of years old. The prices may have changed a little bit, but the one thing is, so domestic credentials are 200. If you have international credentials, I believe it's 250. But that could very well be worth it. It's very well worth it to get those credentials evaluated, because obviously $50 is very cheap if they give you any credit for them at all. And while you're able to take the CPA exam, it doesn't really apply to you. You guys are on a graduate program, but you can take the CPA exam now with just a bachelor's, but you can't get the license until you have that 1 extra year of college. That 1 extra year of college could be in anything. So even if you transfer credits from a different country, those credit hours, even if they don't transfer as accounting or any of the core classes, the hours may certainly transfer, and those hours are what you need for that extra year. So it is, it's very possible that you could have hours transferring in that, even though, like I say, they don't transfer directly into the accounting core, they still count towards the hours of getting the license. So it's very possible that even if before you complete the master's degree, that you would have the hours available, for it and pass it and get the license.
Yeah, and that was my case here, because I have like a bachelor from international in law, and I was like trying to get it evaluated, plus my my graduate program here at Roosevelt, so I can just combine and just move on. So this is my plan for the CBA exam. But thank you so much for the clarification here.
Yeah, and I would definitely say pay the extra $50 and get because and I would probably do it earlier, probably better than later, just to make sure that everything is okay. And you can still, even if they do come back not accepting something, a lot of times you can talk with them and get more clarification on it and get documentation in for it.
Sounds good. Thank you so much.
Okay, so these are the kind of the fees, and they may have changed a little bit, but they're probably going to be pretty close to this. So it's about $1,000 total to take all 4 parts. There's an application fee, that's for all 4 parts. But, yeah, so, and obviously these sections are gonna change in 2024, but I would imagine they'll probably be similar in cost. Oh, here we go. Here's the I'm not sure if you can do, oh, by the way, there is one more thing here that I should mention, and that is the pre-evaluation application. $50. I'm not sure if that applies to foreign academic credentials. That might be something to look into also, because this might, $50 is less risky than 250. So if it does apply to the foreign, you may want to do that. Okay, so here's the examination fees. You get it's cheaper if you take all 4 parts, cheaper per test, but you can certainly take 1 part at a time. There's nothing wrong with that at all. A lot of people do it that way. Okay. Once you met all the credentials for sitting for the exam, you get approval letter. They will give you a payment coupon that you pay the fees. Once you pay the fees, they will give you a notice to schedule. And you will schedule in the Prometric testing scheduler. Now, unless they've cleaned it up from a couple of years ago, the scheduling for the Prometric was really bad. People would sign up for all these, to take the test and then not show up, and they would really fill up these slots really quickly. The reason I'm talking about it is it may be worthwhile if there is a specific time that you want to sit for the exam. Like let's say you're going to sit for it in August, you may want to get everything in say February, because then you can sign up for the to sit for it in August, and hopefully there'll be openings there to take it. Now, it does happen that people back out and cancel those appointments, so sometimes you can keep calling and keep logging on and stuff to see if you can get the time that you want. But if you can get the time, if you know pretty much when you're going to take it, you can get it. The further out you get it, the easier it is. I'll put it that way. Okay, this is once you get to the Prometric Training Center, have identification, and you receive the scores. The scores come back pretty quickly nowadays, but yeah. So once you're done taking it, you'll receive scores, and it'll tell you whether you passed or not. Yeah, but I know what I was going to say though. Now they have these tracks that you can take whether you want to do taxes or consulting and all that kind of stuff. When I was going through, they used to have optional, when you took the test, they would say, okay, here's a tax problem and here's a managerial accounting problem. And you'd have a choice, so your third problem will be either taxes. So if you're good at taxes, you do the tax one. If you're good at managerial, you do the managerial one. So they actually did that in the past when I was going through, but you didn't know that until you got to the exam. Whereas this one is a little bit different in that they actually tell you ahead of time, look, you can specialize, and then you'll only get, for that part of the exam, you only get questions on whichever one of the 3 you pick. Okay. Now, the next thing I'm going to tell you is something you'll never hear anywhere else. Okay, maybe you will, and that is CPA exam, improving your memory and understanding. Now, I have no true interest in studying about how people, how the brain works, other than when we're teaching the CPA exam, the CPA review, and we get tons of information to learn. The question is, how do you do it? How do you get it into that long-term memory? And here's the problem with memory. The CPA exam, studying for the CPA exam, is extremely condensed. You can't do it over a long period of time. It's not going to work. Your brain doesn't work that way. Right? Some students will say, hey, I'm going to start studying the CPA exam a year ahead of time. You're wasting time. You're not going to remember anything a year from ago. It has to be very condensed, usually like 6 weeks, maybe at the most 8 weeks. But it's a very short period of time that you have to cram everything in there, because when it starts getting out more than 6, 7, 8 weeks, you start forgetting. Your brain is programmed to forget. So it's always programmed, a big part of your brain is programmed to forget. You're walking down the street and a blue car goes by, you see the car, it goes by, your brain tells you immediately who cares. You may not even, it probably doesn't even register to you that it's a blue car. You heard it, you probably doesn't even register that you heard it. Your brain tells you immediately, forget it. When you're talking to somebody, stuff that's in the background, your brain tells you, look, that doesn't matter, forget it. Your brain is programmed to forget. You have to overcome that, because you have to overcome that to remember a lot of things in a very short period of time. So the question is, how do you do that? And basically, what you're going to try to do is make your brain work really hard, because the activity in the brain around whatever you're working on is what's going to have you remember. And it's not always, it's not more work even. There's some things that you can do to kind of stimulate brain activity, because then your brain, once it's stimulated around something, the brain says, okay, this is really important, because there's all this activity around this, whatever the topic is. Okay, so that's what we're kind of looking at when we do the memory thing. Okay. To get elements into long-term memory, we need to actively stimulate the brain. Okay, so we have to get the brain to actively stimulate, and it has to be done fairly quickly. They call it synaptic plasticity. You can tell how I pronounce it, that I'm not familiar with it. But it basically can strengthen or weaken over time. It'll increase based on your activity. The more you do something, the more likely it is to be remembered. The less you do, your brain says, okay, not important, get rid of it. And here's the thing too, long-term memory. Long-term memory is extremely short. We're talking about a few seconds. If you want to remember something for more than a few seconds, you have to increase the brain activity. And we've all done this, where you read something, and you go, oh, okay, this, and then you go back, and then you go, oh, wait a minute, what is it? I can't remember what I just read. It's not that you're being lazy or anything. It's your brain. Your brain, you read it really quickly. Your brain said, okay, not important, and dumped it. Okay. So the strengthening of the sentence must be done before the short-term memory is lost. It must be done within seconds. Now, anything that strengthens the synapse adds to the deeper understanding of the objective. It does not mean that it has to be a very difficult topic. People think, oh, I'm really working hard trying to figure this out. Your brain doesn't know that. The difficulty of the task does not have any bearing on brain activity. So if you're working through a quantum physics equation, or if you're throwing bean bags in the backyard, your brain doesn't make the distinction. It's just activity. So that distinction of higher learning and the analysis and synthesis and all that kind of stuff, that's a kind of man-made. There's no biological evidence of it. Your brain, when they study the brain waves, doesn't mean the more difficult the topic or the higher level that you're trying to achieve or working at, your brain doesn't know the difference. It's just strengthening that activity. Okay, so ways to improve. Take notes by hand. The act of writing vastly increases the usage of the motor cortex. You don't need to know that for the CPA exam. And the sensory cortex, probably don't need that one either. But those are very important for the exam because anything that you can do to stimulate brain activity, and you don't realize it, but writing, the act of writing takes a huge amount of brain power. It takes all these motor skills, it takes visually you looking at something and drawing the S and whatever else other letters you have, controlling those little, the fine control over the pen and all that kind of stuff, and putting the pen on the paper and writing, it really takes a tremendous amount of activity. Now, you don't think that because you're so used to doing it. You don't think that that's a lot of work and that's it. But that is brain activity, and that will help you remember those things because your brain says, okay, this is a lot of activity. Doesn't matter what the activity is. This is a lot of activity. We're going to remember because this must be important. So writing it down, the act of writing it down is one of those things that you can do to trick your brain into thinking this is important when normally it would say it's not. Okay. Read the notes out loud and discuss them with classmates. You can read them out loud and not have anyone else in the room. So reading the notes out loud and discuss them with classmates. It's good to have a partner. A lot of times taking the CPA exam, I had a partner. It's really kind of funny. I don't think we were like each other that much, but maybe that was good because we'd always show up and we'd always do the studying together. We'd say things back and forth. This is no, it's like that. Oh yeah, you're right. Go back and forth like that. Now, just saying something. So even if there's no one else around, you're trying to remember something. If you say it out loud, your brain has to work your vocal cords and all that, and it takes a lot of brain power to talk. Think about it. We do it every day. It takes, look at little kids. It takes them, a couple of years or more before you even know what they're saying. So it's really difficult. It's a difficult task. But so you're tricking your brain into saying, look at all this activity. When you're just talking about it to yourself, your brain doesn't make the distinction. Your brain says, oh, this must be very important because look at all this activity around this topic. So talking is one way, saying it out loud is one way of remembering things. And talking to somebody else is a tremendous amount of activity because you're talking about saying it, you're talking about hearing it, reacting to it, and all that kind of stuff. And the brain will say, wow, this is really, this is really important because look at all this activity. Don't forget this. This is important. Okay. Repetition. Oh, this is frowned upon in a lot of our, write this out 10 times or whatever. That's not a bad way to do it. Again, activity. Your brain says, oh, this must be important. I'm going to, you write something out 10 times. A lot of activity. This must be important. And yeah, so repetition is also a good one. Use of memory triggers. This is kind of what we always think about, for remembering things, guided reading, flashcards, those kind of things. This is one, though, that is maybe not so obvious. Color-coded writing. It takes a lot of brain power to see color. Now, you don't think that. You look at something and you say, if you look at two cars and you see a car that is, white, gray, black, you don't say, oh, that car's easy to see. And then an orange car comes by and you go, oh, that's so hard to see it. It's not like that. It's naturally you see it. So, but your brain has uses much more activity to see color than on a black and white scale. So color coordinating things, writing things with different color markers, highlighting, those are all ways of stimulating brain activity. Your brain says, oh, here's the colors, there's more brain activity, this must be important. So using colors, it sounds crazy, but using colors is one of those things that I was talking about Dr. Knudsen. I don't mean to pick on him. Actually, he's a really good friend of mine, but he uses, if you ever see a book that he uses, the whole thing is highlighted. I mean, it's all these different colors, and I mean, you open thing up and it looks like a, Christmas tree or something in it. There is, but that's one of those things, that he always does that, and that's the way you remember stuff. Your brain is spending more activity looking at the colors, and more activity, the more your brain thinks that this is important and will remember it. Okay. Writing things down from memory is one of the highest level things you can do. So get to where you can remember it, and then from your memory, writing it down, because that is remembering it, but also reinforcing that memory with writing, that really puts it in there. And one of the weird things is that they found is studying before sleep. Writing something down or talking about it or whatever, studying it before going to sleep is actually more likely to go into long term than studying during the day. And by the way, if you have to jam, cram for something, you can study for something, write it down, all that kind of stuff. Take a nap for 20 minutes, half hour, an hour, whatever. Wake up, do it again, take another nap. You can do that throughout the night. If you can function that way, that is one way to get a lot of stuff in to your longer term memory. Again, reinforcing whatever, and kind of tricking the brain into remembering it. Any question on that? And by the way, this is not just for the CPA exam. This is for anything. If you're studying for a test in a different class or whatever, I mean, if you can kind of trick your brain by writing things out, using colors, all that kind of stuff, into thinking, wow, this is a lot of activity, I better not forget this. That's kind of what you're aiming. Any question on that? Okay. Let's see here. Let's go to fast and fun footwear. All right, I'll go ahead and take a minute or two to read through this. It's not too long. Okay, one of the ugly things that we have to deal with sometimes being in accounting is that a lot of times we'll get called in when something like this happens, when there's a short, something was stolen, the theft, whatever, something's missing. We get called in and they ask us to figure it out. Okay, so we know all this stuff that happened. And by the way, the stuff we're talking about here comes out of the certified fraud examiner, the CFE exam. Which of the following would be most likely suspect for the missing? Choose. Why? Oh, I know. We could do this on a poll. You just have to answer the first one. Let's do a poll. All right. So just for number one, and then you're going to have to answer two through whatever, two through
Professor, do we have to answer all of these questions or just number one?
just number one. But I think it's going to make you put something in. Well, not 2 through 9, 2 through 10. So just put anything in for 2 through 10. So answer the first one, and then 2 through 10, put in anything. And by the way, there is no right or wrong to this. We actually don't know who actually took them, and quite honestly, I just made this up anyways. So this is actually a crime that never happened. But which one would be your most likely suspect? And again, don't be afraid to answer. Your answer will not be given out to anybody. They won't know who said what. And quite honestly, there's no wrong answer. We really don't know exactly who took it, anyways. Salesperson A. Salesperson B. Wish they had more colors to down here. Yeah, I'll make it more yellow. Yeah. Again, there is no right or wrong answer. So just for number one, just say A, B, or C. Anyone else still working on it? Anyone? All right. I'm gonna close the poll. All right, according to CIA exam, salesperson B. Would be the most likely, and I'll tell you why. Okay, let's look at salesperson A. The common response to someone being accused of something that they didn't do is anger. That's if somebody's accused of something that they didn't do, that's usually the response you're going to get is anger. They get mad about it. What do you mean I took it? I didn't take that. You know, and they really don't even think about, you know, what their defense is or anything like that. They're just, you know, they just get mad when they get when they're accused of. So even though, you know, someone getting mad, that's actually kind of what you would expect from somebody that is being falsely accused. Doesn't it, now again, we don't know exactly who did this, and it doesn't really matter. It's a fictitious case, but this is a normal reaction.
I got a question, Professor.
Mm-hmm.
But in the reading, salesperson B had evidence to back up his claim, right?
Why? Why would, you know, here's, you know, I could have taken the shoes. I was in front of the store all day with the customers. They didn't say whether the shoes were in the front of the store or not. Only somebody who knew would say that. So they're going to tell you, okay, now here's another thing that happens. People will often make, you know, suggest other things could happen, but now, generally speaking, they won't nail themselves down. They use words like probably, maybe, could have been. They use very vague terms because, again, they don't want to be nailed down to it. And so if someone says, well, you know, that it's impossible. They go, well, I just said it could have happened, and I didn't say it did happen. You know, so they use vague terms, things like probably, you know, that sort of thing. So someone coming out with an alibi right away, and also coming out with an alibi that's very specific, that maybe even like in this case, they didn't even know where the shoes were in the first place. If the shoes were on display, they could have been up front, but apparently they probably weren't up front because, you know. And there's two things in here that often happens. Besides, they already have a pair of these shoes. Okay. Well, what this tells you that they like the shoes, for one thing. But this is also a very common. Why would I take them? So why would I do this? Why would I, you know, I do that? Why would I do that? It's also very common. A lot of times theft and just fraud and crime in general is it's not rational. A lot of times it's irrational. And there, you know, there's some people that are so irrational that they just feel this desire to steal stuff and whatever. They're, you know, they have a real problem with it or whatever. But it's not rational. They know it's not rational. So they try to get you to explain, you know, their irrational act. And so that's a very common thing. Why would I? And then whatever it is. So whenever you see those things, it really highlights that, you know, these are common things that you'll see for people that are not being truthful. Now, it could be that A took them. It could be that B took them. It could be the customer took them. You don't exactly know. However, well, and here's another thing about the customers. You know, if it was one pair of shoes, I think, what was this, a box of shoes? I can't remember. See, that's that memory thing. I can't remember. Shit, man. Okay, they don't say how many that were. But anyway, you know, a couple things about that. First of all, just in general, employees steal far more than customers in general. they have more access. They know more of the security measures and things like that than than customers do. Depending on who you listen to, it's somewhere around 6 times more stuff is stolen by employees than by customers in any retail setting. So employees are much more likely to steal stuff than the customers is. And you know where you can see that? You can see that in a lot of stores that have the customers will check out, customer checkout. The stores actually trust customers more than they trust their employee for that very reason. It's more likely that an employee will take something rather than a customer. Yeah, so there's a number of things, and two, if depending on what the size, the customer would have to be pretty bold to do that, to take the shoe, especially with a whole shipment of food. Someone carrying out a box, they would probably raise attention. But again, maybe if it was one pair of shoes, I guess they certainly could have. From the information, we don't know who did it, but a very likely candidate would be their employee. They had an alibi. The alibi was very specific. Yeah, and then some of this down vague terms, and especially this one of these is, why would I? They try to get somebody else to explain it. Okay, let's go to the second part here. Which of the following is a characteristic of a fraudster? By the way, my favorite term in the world, fraudster. It makes you want to be one, so you can use that term, fraudster. Okay. So, who is likely to be a fraudster? Someone who is highly respected? Yes or no? Yep. Good. Yes. Committed a violent crime in the past?
Yes.
Actually, for violent crime, it's no. Oddly. People who commit violent crimes generally don't commit fraud. Now, committed a fraud crime in the past?
Yes.
Yep. Recidivism for fraud is incredibly high. Oops. Yep. Yeah, fraud, it's very common for someone to commit a fraud. They go to jail, they come back out, they do it again. Highly religious? No.
Yes.
You would think no, but it actually is yes. Now, that doesn't mean someone who's highly religious commits fraud. It means that the people who commit fraud generally fall into that category. So don't go accusing somebody who's very religious of being fraudster. It doesn't work that way. It goes back the other way. So yeah, highly religious person. Young?
A part of me wants to say yes, but then a part of me wants to say no.
Actually, no. Young people.
That's like due to lack of experience.
Yeah. Middle-aged.
So yes.
Yep. New employee.
No.
Nope. Old employee.
Yes.
Friendly.
Yes.
Yep.
Yes.
Extroverts.
No.
No.
Usually, yes.
Ooh.
Wait a minute. Hold on. I didn't do something here. Punctual. They're on time.
Yes.
Yep. College educated.
Yes.
Yep. So this is the problem that you have when you're trying to find, when you're trying to figure out who is likely to commit a crime. They look like me. No, they're usually like your best employees. They're college educated. They're if you take it's true there's a lot of different types of people, but if you take the population like in a prison, the normal population in a prison, and you compare it to the people who are in prison for committing fraud, they're completely different. They're completely different. They're generally educated. They generally have families. They generally have, they're socially very well. They do very well. A lot of times they'll be the most liked person in the place. That will that's a likelihood. So literally, your best employees fit the profile of being someone who will commit a fraud. And yeah, they do come in all different shapes and sizes, but in general, they're very, very different than most of your probably, young people usually are more wild, they do crazier things and all this other stuff. But generally it's middle-aged people who are well liked, fit in, blah blah blah. Those are the people that are more likely to. If you look at the population, the prison population, I mean, out of all people in the population, the people who commit fraud are way different than the general population in the prisons. Night and day. I mean, that couldn't be more different almost. So yeah, and that's what makes it hard. Who's likely to commit a fraud? Your best employee. I can't remember if I did. Did I show I might have a brother-in-law. I think some of you may have already seen it. The film about Anthony, my brother-in-law, caught up with some bad people. Maybe I'll show that. Not today, but I'll show that. I can't remember if I showed it in here. But your best people, the people who are, those are more likely to commit fraud than anyone else, which makes it things difficult. Okay. Let's take a break and then we'll come back. Can we come back? We'll start in on the chapter 13 handout. I don't think that should take very long. All right, so let's see. We'll say be back at 7:05. Okay, chapter 13 is about property, plant, and equipment, long-term stuff. Now, time spent on property, plant, and equipment versus current assets. For instance, let's say, inventory of equipment versus just plain old merchandise inventory. Which one's going to take more time? Taking a physical inventory of property, plant, and equipment, or of merchandise?
Property, plant, and equipment.
Actually, property, plant, and equipment is probably going to take less time.
I was gonna say, wouldn't merchandise?
I'm sorry, go ahead.
Wouldn't it be merchandise?
Yeah, because and the reason being that merchandise is coming in, going out all the time. It's in motion basically. Whereas property, plant, and equipment, if you have a building, it's not going to go anywhere. You're probably coming in next year, it's still there, and equipment too. While they do get new equipment in and old equipment goes out, the turnover equipment is probably fairly low, every 5 years or 10 years or whatever it is. So if it's something that's really moving fast, like merchandise, that takes a lot more time. You have to figure out the cutoffs and all that kind of stuff. Whereas property, plant, and equipment, generally you don't have to worry about it as much. Property, plant, and equipment too, things like the cutoff are not nearly as important. And the reason being is that we usually round off, like for depreciation, to the nearest month. So, you kind of get this thing that if it doesn't matter nearly as much of the cutoff at the end of the year. Now you still do one, generally in just as part of an audit, but it's not nearly as important because it doesn't usually have any impact on the financial statements. If they bought something on December 27th, but they didn't record it until January 1st, there wouldn't have been any depreciation anyways. You round off the nearest month, it would have been 0 months in that year. It's not going to make that big of a difference. It's not going to have any impact on the income. So it's also, it's very slow moving, generally speaking. So time spent, so oops, let's try that again. Let's try that a third time, how about? The more time we spend on current assets than long-term assets. They're generally faster moving. Okay, initial audits. Physical inventory. Extra A in there. Okay, so usually the first audit will have a complete property, plant, and equipment physical inventory. In subsequent ones, repeat engagements, the physical inventory is usually only taken every 3 to 5 years. I should say a complete. Okay. What did I do? I did something wrong. In between the complete inventories, only the additions only in between only the additions and retirements will be tested. So we do a complete inventory every 3 to 5 years. After the first initial audit, we'll do a complete inventory. After that, it's usually 3 to 5 years. And in between, you only do additions and retirement. Okay, what did you add? What did you retire? That sort of thing. Okay, so obtain a summary analysis of changes in property, plant, and equipment. So you're looking for the changes in it.
Professor, can you scroll down for a little bit?
This way.
Thank you.
You're welcome. So you're gonna see what they retired and what they purchased, and then see if they show up in the ledger, in the general ledger. So this is oops, hold on a second. So you're going to testing the actual acquisitions retirements to the ledger accounts. Lots of additions to property, plant, and equipment through the year. So a lot of times you'll actually take a look at the invoices and things like that. For additions. There's usually quite a bit of documentation that goes along with additions. Additions are generally easier than retirements. I'll tell you why when we get to it, but there's usually a lot of stuff. There's usually installation, there may be paying people to install a thing, doing test runs and all this kind of stuff. A lot of times there's like a whole bunch of documentation that goes along with an addition. Okay, so after you vouch for all these purchase orders and all this stuff, then you make a physical inspection of it. Actually verify that the prep plant equipment is installed and that it is functioning. One of the things about property, plant, and equipment is that it must be operational to be in property, plant, and equipment. So if they have a machine that they brought it, it's sitting in the place, but it's not actually operational, it doesn't go in property, plant, and equipment. Excuse me. It'll go in other assets. So that's another asset not in use. And it could be that they're waiting for whatever to happen before they use it, but again, property, plant, and equipment is only for operational assets. So if it's not operational, they're not using it, then it goes into other assets at the end of the balance sheet of the assets. Okay. Analyze repair and maintenance expense accounts. This might sound kind of funny, but major repairs that increase the life or capacity to be capitalized and not expensed. Eh. All right. Should talk about this one. Okay, so major repairs that increase the life or the capacity should be capitalized and not expensed. So normal repair and maintenance expenses are expensed, obviously. So repair and maintenance expenses, in general, you expense those. So let's take for instance, a truck. You got a truck and you got to put new tires on it. Okay, that's just, that's just normal maintenance. Put gas in it, that's normal expense. You put oil in it, normal maintenance, and blah, blah, blah. So the normal kind of repair and maintenance and even operation of the truck is all going to be expensed. Okay, so those are just expenses. Get your tires, get whatever, fix the radiator, whatever it is. Those are just expenses. Now, if you do a major repair, let's say that you completely overhaul the engine, and now instead of lasting for 30,000 miles, it's going to last for 80,000 miles. So you've increased the life of the truck. That should be capitalized. That cost should not be expensed. It should be added into the truck. Or if you make the asset better, okay, let's say that you have this truck and you are hauling heavier loads and you go, okay, well, this is a 1-ton truck and we can convert it into a 2-ton truck for whatever. And so you convert it into a 2-ton truck. Well, now it's a better truck. The capacity is increased. Now instead of hauling 1-ton loads, it can haul 2-ton loads. So if it increases the life or the capacity, whatever the cost is, you add that into the truck. So if you overhaul the engine and overhauling the engine costs $4,000, you add that into the value of the truck, and then it gets depreciated just like you didn't. It was like a normal asset, but initially those additional costs will get what they call capitalized and put into the truck. Okay, here we go. Okay. Status of property, plant, and equipment not in use. Yeah, I kind of talked about this already. Non-use should be classified Property, plant, and equipment not used should be classified as another asset. So if they're not using it for whatever reason, take it out of property, plant, and equipment, put it in the other asset account. You know what, I gotta make one more, add on to this. If the PP&E is land, land not in use is usually classified as investment. So if it's a piece of equipment, it's going to be classified as other asset. If it's land, just say the unused. So in that case, it's usually going to be classified as an investment. It's land. So land not in use is usually an investment. Equipment not in use is another asset. Okay, test the client's provision for depreciation. Depreciation method and the estimates used should be appropriate. So which method are they using? And the estimates they use. So they're using straight line and the estimates are that it's going to last for 5 years. Okay, should they be using a straight line and should they use 5 years or should they use 7 years or whatever? Okay, evaluate and test the impairments of property, plant, and equipment. This is a kind of a funny topic nowadays. In the US. And this is impaired if the non-discounted we're not going to get too far into this. I mean, we're not going to go into the nuts and bolts of it. In the US, the asset is impaired if the non-discounted estimated future cash flow. Okay, so they don't discount them. This would, whatever the cash flows are going to be dollar for dollar for the next 5 years, say. If those are less than the carry value, then the asset is impaired. In other words, if you're not going to get the money back in cash, you have this piece of equipment on the books for $30,000, but you're only going to get $20,000 worth of cash back, then it's impaired. Once you determine it's impaired, then there's some other things that kick in for the value of it. But it's impaired if the non-discounted future cash flows are less than the carry value. Okay, so, and this is kind of this can be kind of a big thing, and it could be also for very large, sometimes it'll be for entire investment, they buy out a small company or something like that, that entire custom company may be impaired. They'd have to reduce it on the book, so these can actually be very kind of large amounts too. Okay. Investigate retirements. Retirements are actually a big problem. Bigger than acquisitions usually to figure out. Retirements are much more difficult because of the lack of an audit trail. Okay, what we mean by that is often there are no documents. Say there is no documentation. Technically, there should be a retirement. When something is retired, there should be a retirement order that is, that they use to retire the asset, take it off the books. But oftentimes that doesn't happen. And, unlike new equipment coming in where everybody's all excited and they're getting it in and getting it working and all that, a lot of times the old piece of machinery is, shoved out to the alley, maybe sold for scrap. And, as an accountant, it's very possible we don't even know about it. We don't walk around the floor, every day and see what they're, necessarily what they're doing. So a lot of times there's not any documentation that this thing was left. Now there should be, when something is retired, they should have, internal controls in place to let people know that, hey, this is retired. However, it's not always the case. A lot of times, they push it out into the alley or something, and it's not known. And the question is, how do you find those things? Well, one test is floor to book and book to floor. Now, on the book, things that are retired are usually older. So on the book, you go to things that are older on the books. Okay, here's a piece of equipment that is, was 8 years old and it's been on the books for 10 years. Let's look at that one. Let's go find that. Because that's more likely when one of those things that is actually gone, but that you don't have any documentation. And so looking for things, retirements are much more difficult sometimes to come across because nobody cares. That they're gone. They're focused on the new stuff coming in that has a lot of documentation, whereas the stuff that is retired, that is gone, a lot of times there isn't much on it. So how do you find that? Look for older equipment in the general ledger. Find some older equipment, go look for it, see if they retired it. Also, you can also look to the new equipment if it's replacing, if new equipment replace something. Okay. The yarn in the last sentence makes some sense. Let me take a look. Oh, you're right. See, some people, some teachers are stingy with their words. I give you extra words. See, that's I want you guys to get value for your money, so I put in extra words in my sentences. Just they're often there is no, yeah, for the retirements. I don't know. I'm just gonna leave it. Okay, so there's no documentation. A lot of times, now there should be a report of retirement, and two, there should be something, because sometimes, especially if they have a value to them, if there is a residual value, that should be tracked. Because maybe someone could sell it for something. You don't always want to throw it out in the alley. Someone, and the manager goes out and throws it in his pickup truck and sells it on eBay. But yeah, but retirements are difficult. Yeah, because you don't have the documentation. And thank you for that. Every now and I'll write something crazy, and then it'll show up in the on like the exams. Why'd you say that? Well, you said it, knucklehead. All right. Exam on legal ownership of property, plant, and equipment. And a lot of times the equipment isn't so, a lot of times it's delivered and all that. It could be that it's delivered and then leased. So that's part of it. But especially for things like land. So let's say for land, what you're going to do for land is inspect any deeds and insurance policies on the land. And usually you're looking at what the client has. So if the client is paying insurance policies, or if they have any of the deeds to them, that is evidence that they own it. Could be there also loan documents. Now, you might say, well, land that's recorded, you can go to like the county and see who owns this land. A lot of times those are not up to date. So if this is something that's new, like they bought a new land, a lot of times when you buy like a property, you're actually buying the land, and oh, by the way, there's a building on it. You own that too. So it'll be land and anything on it. But a lot of times there are delays in the paperwork getting. So even though you say, well, can I go to the county courthouse or whatever, and you can. There's nothing against it, but oftentimes that's out of date, and especially if it's a new edition. Okay, we're gonna skip 11, 10, and 11. These are actually a little bit out of date anyways, but we'll talk about them in a little bit. Okay, perform analytical procedures. Most large purchases should be in the capital budget. So one of the things you look for if they have, if they bought property, plant, or equipment, is that they have that in what they call the capital budget. Capital budget is usually for very large things, and the budget is there so that the money is there so they can do these things. So if you have to buy if you have to build a new building or something like that, That's gonna be in the capital budget, because they have to find the money somewhere to build that thing. So most large purchase meetings, so you can trace. The additions. To the capital budget. So they should be in there. And that's just comparing one to the other. Now, if they do have an addition that isn't in the capital budget, that doesn't necessarily mean it's a problem. But most of the things should be in there. So if you're trying to get, analytical procedures are kind of like when you compare things to see if they are plausible. So while you would expect everything that's large to be in the capital budget, it's possible that they aren't, but they'll tell you where to look. So if you see a purchase of a large asset and it's not in the capital budget, you should probably go look at that, because it probably should be in there. Or if there's something in the capital budget that looks like it should have been purchased and it's not, again, that's something you have to investigate. Did you actually buy this thing or whatever? So any discrepancies between the additions and the capital budget are generally things you have to look at. Capital budget is a big one, though. Okay. Let's see. This isn't as big of a problem as it was in the past, the leased assets. In the past, we used to have a bunch of rules for what would be called a leased asset versus an owned asset. And we always looked at, and by the way, one of the things that you should get used to is the term substance over form. So if you are leasing something, generally you don't own it. That's why you'd have airlines that didn't have any airplanes. They would lease the airplanes from somebody else, they'd pay the lease payments, and they didn't own the airplanes. So they wouldn't have them on their books. And they don't want them on their books. They don't want them on their books because of big assets that have big liabilities that go along with them. They don't want the assets, they really don't want the liabilities, and they don't want the big depreciation and all that kind of stuff that goes along with having those big assets on the books. So they would do what they call off-balance sheet finance. That is almost impossible to do now. If you have a lease that's more than current, it's over 1 year, you have to capitalize that and put it on the books. So that can come in two different forms. You lease a truck for 5 years, you're going to put that truck on the books. Even though legally you don't own it, you're going to put it on the books. Whoever leasing it to you is going to count that as a sale, even though they didn't sell you the truck. Legally, they own the truck, but they're going to count that as a sale because, that they're leasing it to you for the next 5 years. It's kind of like a lease payment, sort of like a loan. And so you can run into this situation where it could be on, it could be switching from one to the other. And there are some weird things that can happen. If, for instance, let's say you lease a truck to somebody that is in bankruptcy, if you don't believe that they can make all the payments on it, you might keep the truck on your books because they're not going to be able to make the payments on the truck. So you could have actually the same truck on two different books. Whoever's leasing it says, okay, this really isn't a sale because they're not going to be able to pay it. We're going to have to go get the truck back. Whereas whoever's leasing it is the leasee is going to say, okay, even though we're in bankruptcy, we still have this truck on our books because it's a long-term lease, and so you can run into kind of weird situation where you have duplication of assets. Okay, and this kind of again, this goes both ways. So the lessee, anything over a year. This isn't nearly a problem that it was before. And by the way, if you're wondering about why they do that, whether you're signing a 5-year lease or a 5-year loan, it's a legal obligation. So for both of these, it's going to be anything over 1 year. Huh. I should say anything over 1 year is. Leasehold improvements. Leasehold improvements.
Professor, can you scroll down for 1 second? I missed what you changed. Oh, it's so, okay.
Leasehold improvements. When I was going through, these were pretty boring, but now they're not anymore. Leasehold improvements are when, well, when a lease gets improved. Hey, I don't know, I'll insert the shapes. Ah. Okay, I know this is gonna turn out to be a disaster, but I'm gonna keep going through with it. All right, let's say we have a building that we're leasing. And on that building, we put a sign on it. Okay, so here's the building. We put a sign on it that says "Eat at Joe's." Who owns the sign? Person leasing it, or the group leasing it, or the building owner?
The building owner.
Yep, this is an attachment. That's exactly right. So this is an attachment. So leasehold improvements are actually not legally owned by whoever's leasing it. So leasehold improvements will be held as assets. They're generally intangible assets because the tangible ownership is whoever owns the building. Although they usually don't talk about it that way. And these usually go in property, plant, and equipment, even though they are intangibles. So the building attachments are owned by the building owner. So if you attach a sign to the building, you no longer own that sign if you're leasing it. Whoever owns the building owns that sign legally. However, you'll still put that on your book. So, you go to these theme restaurants, you go to like whatever, Red Lobster. Red Lobster, they have a bill, they have a whatever, Red Lobster in a mall or something like that. All that stuff that they attach to the walls, legally, whoever owns the building owns it. So you run into some of the problem, and these can be huge dollars, by the way. And for some of these franchise places and whatever, these can be in the billions. But they McDonald's and all their kind of stuff. So the problem is, okay, how long are those attachment is gonna last for? How long is that EHO sign gonna last? It might last for 20 years, but maybe the lease is only for 5. And if they only have a 5-year lease, that thing has to be not really depreciated, it's amortization, but the same idea, over 5 years instead of 20 years. Unless, unless that they have an ironclad contract that says that they can lease it for the entire 20 years. It's whatever the shortest amount of that lease that's guaranteed, that's what they have to depreciate over. There was a problem a few years ago where all these places would assume that the leases would be renewed, and there was just a wave of them not being renewed. And so you had all these huge write-downs by these places for the leasehold improvements. And again, these are literally in the billions of dollars, and they build out these places. So leasehold improvements used to be really boring, and then they got really exciting for a while. Okay. Footnote disclosure. We already talked about this. Basis for depreciation has to be disclosed. I don't even know. I really don't even have to put anything in for these. Any property, plant, and equipment pledged for collateral for loans, usually. Property, plant, and equipment not currently being used, and again, this is usually recategorized as, I will put something in for this one. Recategorize it. That's not a word. No spelling suggestion. Okay, they're all hyphenated. Okay. So property, plant, and equipment not currently being used, you're going to recategorize that as either other assets or investment. And we'll put it right in there in the footnotes. So these are the footnote disclosures that they're required by GAAP. So this is required by GAAP. Okay, that's it for this one. All right, well, you know what? I did not get through everything. Let's see what I did here. All right, we'll postpone this till next week. So next week we'll do this, and then I'll start the exam next week. And the exam will not be on the 7th; it'll be on the 14th. And I'll change that in Blackboard. Okay, so we'll call it a night. So we'll do the multiple choice next week. I want to give you guys time to do that one, and also next week we will do. We're getting late. This one is week 11. We have to. There's one more statistics handout that is kind of like a review for all the stats that we do, and then I will send out that exam also. Of course, that'll be 2 exams in 1 week. Do I really want to do that? Yeah, we'll do it. I'll give you more time on the stats one. But so what we'll do next week is we'll finish up the 12 and 13. I'll give you guys multiple choice questions. We'll get those put in, and then we'll do the review for the stats exam. And I'll probably send both of those out next week, and I might stagger the due date. I'll make the 12 and 13 due on the 14th, and then maybe on the 21st I'll have the other one. We'll make the statistics one due. Statistics one takes a little longer. It's actually, I think, the hardest of all these tests. So, other than maybe the cash one, chip or 10. All right. Well, any questions? Okay. All right, well, I will see you guys in a week's time, and wait, let me do one thing really quickly, I think I have a drop put in for the chapter 13. Yeah. Oh, and the fast fun footwear. So handout for property, plant, and equipment, and then there's also the fast fun footwear, so you can turn those other thing in. This will not be due until next week. So fast fun footwear and chapter 13, those can both be handed in tonight, and yeah. And then next week we'll finish up chapter 13, 12 and 13. Okay, have a good evening.
No, thank you.
Good night,
Have a-
night.
Nice.
Good night.